Hey guys, Red here. Thanks for watching. I want to talk to you a little bit about something that's been going on in our economy with the real estate market. And as we talk about on the channel, as the landscape of real estate and real estate investing changes, we have to make sure that we are following suit, or we are making the necessary adjustments to be successful with the ever changing and often changing landscape that is real estate investing. Okay. It's a ever changing situation that investors find themselves in, right? We have our ebbs and flows of things being good, things being not as good. We have trendy things. We have short-term rentals, long-term rentals, things that come up that we jump onto. Things are always changing. So as you guys know on the channel, I like to discuss everything to make sure that we're always ahead of the curve and you guys always understand what you should be doing with your investments, okay? Now, I want to talk today a little bit about something that's been going on with our federal government and how they are directly influencing our housing market, okay? I'm getting a lot of phone calls lately. Rhett, do you think that there's going to be a burst? Rhett, do you think that this thing's over and things are going to implode and we're going to lose all this money? Yada, yada, yada. Guys, there's one constant when it comes to real estate investing that'll guarantee our success over the long term, okay? If you're in this thing to get rich quick, you are in the wrong industry, all right? When it comes to real estate investing, it's all about playing the law of averages, okay? We want to buy when things are high, and we want to buy when things are low, and we want to buy when things are in the middle, all right? We're not trying to just buy low and then flip it and then be gone, right? Now, flips, of course, there is an art to that, and that's a little bit different. But when we're talking about buy and holds, it shouldn't matter if our economy is up here or at the bottom. When we buy and holds, and we're talking about having rental properties for the long term, the actual situation at the current day should not matter. We should buy, month after month. If it's month after month for you, if it's week after week for you, if it's year after year for you, it doesn't matter. As long as we're consistently buying, we're going to be fine, because over the long term, we will average out for a good return. If we continue to buy, we'll be good across the board. Now, when people get themselves in trouble, it's because they buy or they wait to buy until things are really low. And what happens is they wait years. Like if you think about it, right? If you wanted to buy early in COVID and things were going up, right? In 2020, things are just going up. You're, I'll wait. Guess what? You're still waiting. It's, we're halfway through 2022. You're still waiting. Right? You're saying to yourself, oh, maybe I'll buy, maybe things will crash in 6 months, or maybe they don't. So you have to continue to buy throughout any kind of economic uncertainty. Now, what is the federal government doing exactly to manipulate this market? Well, as you guys know, we've talked about it on the channel, the U.S. government prints off trillions of dollars and has over the past couple of years, and now inflation is through the roof. Now, for Section 8 investors, this is really going to play into our strong suit, because more and more people are going to need to rely on government-assisted housing. However, because inflation is so high, the U.S. government is saying, okay, we need to cut down on inflation. The current administration says, okay, things are bad. Gas prices are through the roof. Inflation's through the roof. We're almost at 10% through hyperinflation. What are we going to do? Okay, well, let's look. Where are people acquiring so much wealth? And right now, people are looking and they're going, wow, look at all this wealth that's being acquired through real estate, right? Houses are selling for crazy, crazy amounts. Okay, what can we do to slow down real estate wealth quickly? Number one, we increase interest rates, because that will slow down the market, which will stop people from being able to sell their properties for hundreds and hundreds of thousands of dollars over asking price, or have all this equity and just all of a sudden be able to grab a couple $100,000 in cash. Because people that are acquiring wealth quickly, it's adding to inflation, because home prices are inflated, okay? They're not. Just the demand is so high and the supply is too low, which is why the price is like that. But The government says, okay, we need to cut down on quick ways to wealth, quick money. That's when we're going to do it. We're going to make interest rates really, really high. Number two, I don't know if any of you guys have looked at the price of lumber over the past couple weeks. Plummeting. Why are they doing that? They're manipulating the lumber market because if supplies are cheaper, then builders can build things for less money. There's less supply. There's more supply, right? So housing prices will fall. If the cost of materials falls, the housing prices will fall. So they're behind the scenes manipulating everything to try and cut down inflation, but it's directly impacting the real estate market. Now, what does that mean for us? Long-term investors who have long-term tenants and assume that we want to have tenants in our units for 10, 20, 30 years. What does that mean for us? Let me think. Nothing. It doesn't mean anything because we're going to buy when things are good. We're going to buy when things are bad. We're going to buy when things are terrible. And we're going to buy when things are great. It doesn't matter for us. We're going to buy through everything. That is how we create strong rental portfolios. Now, I have a lot of people, viewers of this channel that reach out to me and they say, Rhett, listen, I'm not buying right now. I'm going to wait. Guess what, guys? You blink and it's 5 years down the road and you still don't have a rental property. Okay? The time is now. The time is now. The time is now. Get off your butts. Get this thing started. Stop making excuses. When I hear people, oh, I don't want to do this. I don't want to do this because the market. It's excuses. It's easy to look back and say, wow, that was a great time to buy. Or, oh, that was a great time to buy. But when you're living in that moment, you can always find excuses. Yeah, hindsight's 20/20. We can look back at any year over the past 20 years and say, oh, that was a great year to buy. That was a great year to buy. But when you're in that moment, there are other things going on. For example, in 2000, you talk about 2016, 2020. People are like, oh, yeah, it was a great time to buy. It was a fantastic time to buy. But during those times, there was tons of uncertainty. Tons and tons and tons. We had government shutdowns, okay? We have other issues going on in the world. You go back to COVID, and people go, oh, man, I should have bought an Airbnb in COVID. Man, that would have been amazing. All the prices were so low. Now people are traveling all over the place getting into Airbnbs. Well, back in 2020, nobody was in Airbnb. People were thinking that it was going to go out of business, right? So what I'm saying, guys, is hop on, get in the game, stop making excuses. We're going to buy regardless of what is going on, okay? Because eventually we're going to be constant. If we continue to buy throughout whatever's going on in the world, we're going to be able to buy constantly for years and years and years, and we're not going to allow outside factors to affect our decisions to continue to scale and continue to add to our portfolios. When is the best time to plant a tree? 20 years ago. That was the best time to plant a tree, right? Second best time, right now. Okay, guys, let's get it done. Stop making excuses. Time to buy, time to buy, time to buy. We'll see you next time.